The Financial Times forecasted 2017 would not be an easy ride. They saw political earthquakes destabilizing markets in the year ahead. Were they right? Not if volatility is the measuring stick. Actually, stock market investors have rarely had it easier. The S&P 500 is up 12 months in a row. Meanwhile, the VIX Volatility Index is at a 50-year low. That's about as smooth a ride as it gets in the markets. Of course, not all volatility is created equal. There's such thing as upside volatility, the happy kind. Bitcoin investors know what I'm talking about. A lot of investors have been walking on sunshine in 2017. It's been a bull market in everything. At least that's what The Economist says. I mean, take the art market. All-time record sale this year, $450 million for a Da Vinci. Or you could look at the sports arena. The Houston Rockets sold for over $2 billion. Basically, where we're left is asset valuations across the board are really high in relation to a whole bunch of metrics like disposable income, GDP, you name it. And yet, it's all a bit confusing. There's this big party happening in the markets, but what about all the problems out there?
I must have dreamed 1,000 dreams, eluded by a million screams, but I can hear the marching feet moving into the street. Now did you read the news today? They say the day just gone our way, but I can see the fire still alight, burning into the night. There's too many men, too many people making too many problems, and there's not much love to go around. Can't you see this is a land of confusion? This is the world we live in, and these are the hands.
Look, politically, socially, we're living in a bizarre world, it seems sometimes. But in terms of things that typically end an investment cycle, there's usually three culprits. It's either a geopolitical risk, inflation overheating, we could call that the fire scenario, or a deflationary impulse in the economy that causes a recession. We could call that the ice scenario. A big part of the reason markets were strong in 2017 was we had a Goldilocks scenario, not too hot, not too cold. In other words, we saw strong corporate earnings growth year over year, but without a whole lot of inflation. Meanwhile, tensions with North Korea didn't exactly boil over, and we avoided a trade war while passing tax reform. So all in all, not too bad of an outcome. Looking at 2018, I'm not really fearing the inflation scenario so much. Part of that is because of the nature of this cycle. It's been a technology cycle. If you look at the changing shape of the American economy over the last 100 years, you'll see that it's become tech dominant. Tech by its very nature is about cheaper, better, faster. It's about pricing power, getting knocked down, productivity enhancements. That's disinflationary. And we really see that borne out in the data if you look at the trend of recent years. They say there's never a dull moment in markets, and that's sure to be the case next year. Good luck in 2018.